I have bad news for you. It's here. We're going down big time this year. I'm predicting the biggest crash January 2023. And so that's why we're glad you listened, so you don't have to be a victim of all this wokeism and stupidity out there in the marketplace. And the trouble with the real estate market, the stock market, bond market, real estate market. Trouble with the real estate market, when it goes down, it's like a sinkhole. It takes businesses, neighborhoods, it takes everything with them because it affects so many more people. Whereas stock, you could lose Apple and United Apple, it doesn't affect you. But when you lose a business or real estate and all this, it takes everything down with them. So that's why right now there's migrations out of certain states and into certain states. And the reason I like oil is because you can't print oil. You can print stocks, you can print ETFs, you can print money, but you can't print oil, yet at least. And what I say is that civilization runs on energy. And if we don't have enough energy or the price of energy goes up, standard of living comes down. And that's why what happened when our buddy Biden took the Keystone XL pipeline offline, it made me richer because the oil that Mike and I were selling from our oil wells in North Dakota and Louisiana and Texas, we were selling at $30 a barrel. When Biden got elected, oil went to a spike to 130. Every time there's hyperinflation, dictators arise, revolutions come up. That was Stalin, Mao, Lenin, and Hitler. And we're cruising for that right now. Hyperinflation pisses people off. Can't put food on the table, they can't afford to live, lifestyle crashes, standard of living crashes. But the bad thing is because this energy that's driving a lot of it plus too much money, it makes everything expensive. This market's going to come down big time, big time. So what are you saying to people?
Most people sadly have a buy and hope strategy. They buy their investments, their mutual funds, and their 401k, and they just hope everything's going to work out. As I've said before in the show, hope is not a retirement strategy. And that's what most people do. They have their head in the sand, and so far they've woken up today and they've seen their 401k down by 25, 30%, wondering what happened. And this is not over. If people think that that's going to get better, it's not. Things are going to get a lot worse, as Robert says.
And the biggest bubble of all, most people don't know this, is corporate credit. And what was happening during the boom when they kept dropping interest rates, zero interest rates, many companies couldn't grow their companies. So they would borrow off the balance sheet of their company and they'd buy back their stock. And they would stock the company full of this debt to buy back their stock. Like Apple just uses their credit to buy more Apple stock. That's what it means. And now the stock markets are crashing. The same with bond markets. The reason London or England just went down is they couldn't make the pensions, the defined benefit pensions for the people. So what they did is they borrowed money at 0% to buy bonds at 3%, hoping that would pay for the retirees. And there's, like in America, 10,000 a day retiring today. And all of a sudden, when they did that thing where they reversed and the interest rates dropped, bond markets dropped. I won't touch anything you can print. If you can print it, toilet paper is printable. That's how I look at it.
Well, it's as John said, a lot of people with 401ks, they're a buy and hold strategy. I think most people that are accredited and have made a lot of money in their career, one, they want to put that money to work where they can generate cash flow. And two, they want to not pay taxes.
Right.
But anyway, as far as oil and gas, you have what's called intangible drilling cost deductions, or IDCs. And IDCs is pretty much, you can write off right at about 70, 75% of that in a well. So an investor that's coming in who is in a top tax bracket, he's able to actually create a savings because the federal government is coming in and they're writing that off because they want people to find, regardless of what you read in the paper today, we still need oil and gas reserves, so those tax advantages are still there. So in essence, if you're in a 35% tax bracket and say you invest $100,000, that's about a $27,000 savings that you're able to gain, right when you invest. So that reduces the amount of risk you have or money you have at risk.
Right. That's what Tom Wheelwright writes about in his Tax-Free Wealth book. He talks about tax breaks are incentives. So if you start a business, they give you an incentive for that. You drill for oil, you provide housing, they're in tax incentives. But if you're an employee or a self-employed small business owner, you get taxed the highest. So let's say on top of that, when we strike oil, I get a depletion allowance too. What does that mean?
Well, the depletion allowance is on every dollar that is produced or you make income from oil. The federal government allows you to take a 15% depletion allowance. So you're able to take that off of your income that you're generating from oil and gas. But the main plus is that you're looking for cash flow, right? You're looking to strike oil. You're looking for that oil.
We're not to buy, hold, and pray.
No.
that's right. I mean, I'm not. I want my money back and pay no taxes.
Right. Basically, you're drilling wells. The areas that we participate in are primarily the Bakken up in North Dakota, which it's an unconventional play, like we talked about a little bit earlier, the horizontal play. But there's been over 14,000 wells drilled there now.
And what's happened is some of the things I've invested in, you're still paying me, right?
Right. You're getting a check every month.
Yeah. And that's why, John, you don't find me with a 401k, celebrating, because the cash is flowing the other way. It's flowing to Wall Street. And when I invest with Mike Maselli, it's flowing towards me, and the government gives me tax breaks. The point here is this: the reason we have the cash flow board game is for you to get out of that race and qualify to invest as an accredited investor on the fast track. But of course, most people can't do that because they don't have any financial education. But they don't have enough money anyway. I mean,
100%. I mean, the average 401k is $70,000. I mean, and that's what people are expecting to retire on at age 65. I mean, it's absolutely scary.
I'm predicting the biggest crash January 2023, just like Mother England went down, because they're playing games with money and interest rates and all that other garbage. But what do you think a financial play say to let's say a 68-year-old, 70-year-old guy whose 401k is toast?
I'll tell you exactly what they're saying. I just had a conversation with a couple of advisors the other day. They're saying stay in. It's buy, hold. It's not, and then they'll say it's not timing. We don't want to time the market. It's time in the market. Don't worry, everything will resolve itself. Everything will come back as usual, as it always has in the past. Those are the standard bylines that you're hearing from the financial industry. Just stay the course.
So if a person, I'm not against paper assets, it's just being an entrepreneur. I don't have to invest in them. I don't trust paper at all. Toilet paper's on it, I don't trust it. But what do people paper has many advantages that I don't have. I mean, the hard asset guy doesn't.
I think the big one we could just focus on is liquidity. I mean, I could get out like that with a click of my smartphone, whereas hard assets, you don't have that flexibility. So that's the key advantage that I like.
So when I invest with Mike, I'm in for the long term, and that's why I've got to be careful what he invests in, what he does with the money. So final words, I only invest in what cannot be printed. It's that simple. But I'm not invited on most of the stock shows because all they want to do is sell you more stock. So what would you advise somebody who wants to switch out of paper into what you're doing? Any advice?
Well, just on the oil issue itself, I mean, I think, a lot of people don't really understand what oil is used for. Oil is in just about everything we touch.
Right, plastic, paper bag.
Paper bags, and food. And of course, we're going to see real food shortages, right? Fertilizer, we're going to see real food shortages here this year coming up. I think Europe is in a really bad place. But, a lot of our clients, they're in paper. I mean, they take a portion of their income and they put it into oil and gas or gold or silver or something, just to have that diversification. Just a normal investor, a lot of them, they obviously want that diversification into energy because I think everybody sees that, they can see through this stuff that this administration is trying to push. I mean, they go to the gas pump every day. Diesel is still selling for close to $5 a gallon. I mean, as far as that, gasoline is still, even though they can continue to say, that it's going down, I mean, they're depleting our national reserves. I mean,
what is that? Well, why are they depleting our reserves? They could just drill more.
One thing, they want to do away with hydrocarbons. Secondly is you've got a midterm election coming up that obviously they don't want to see high oil prices. I can promise you after the election is over with, they're going to stop taking oil out of the National Reserve, the Defense Reserve, and then they're going to, we're going to see high prices again. But that's the reason why. How many barrels of oil how many millions of barrels? I think they're releasing 1 million barrels a day just to keep the price down.
So they get reelected?
So they get reelected, and then they can go forward and push this Green New Deal even further than it is today.